We're going to get a chart up, basic one, with your sort of the levels you're expecting for this. Short term, you're saying we trade between 3,500 and 6,500. Guys, give me my chart up, please. And then we drop to maybe 2,500. I have to say, from 3,900, that's quite a range. Do you have any basis for your forecasts here?
Yeah, you know, it's a bit of a Wild West show out here in the crypto land, that's for sure. So we have to be a little bit guarded, looking at some of these, some of the metrics, basically just unquantified risk. What I'm really looking at here is the way coins have been trading over the last few months, and it's indicated that the bottom's not in, so therefore I don't think any mature investor is willing to catch this falling knife. And that tells me there's more room to go, and as soon as we hit some of these key round-figured inflection points, 3,500, 2,500, I think these psychological impact will weigh on more inexperienced traders. Listen, I'm not negative on blockchain over the long term. I'm just so uncertain about where coins are headed, and given the momentum we've had over the past year, this price action is not positive, and despite what soothsayers say, it's not a good time to go in because we really can't quantify what we're really buying at these levels. So, you know, this is the issue I have with trying to understand coins at specific inflection points.
So what do you say to those that say this is all just due to temporary factors right now, Stephen? You know, you have this market volatility in stocks. You have these forks that have basically produced all these parallel currencies like Bitcoin Cash that's leading to some of these, I guess, price wars, so to speak. Is that what we're seeing here, or is there actually something that is unraveling that is more fundamental?
I think that was one of the main catalysts that saw us break convincingly below 6,000, then 5,000. But I think there's this long-held argument here that the lack of participation from Wall Street, the lack of interest from big investment banks to sell this product to their core investors, I think that weighs negatively. And when you overlay that with the regulatory landscape that seems to be tightening up by the week, not to mention the amount of hacks that could possibly come out of the fray as all these new coins come into play, you know, it's a little bit confusing here, and there's a reason why we're falling, and I think these reasons, when you add them all up together, this is the reason. I mean, there's not one smoking gun, but there's a number of factors that are adding to this current meltdown.
So, Stephen, theoretical question. If all of these coins fall to zero, is there any spillover effect into other asset classes?
That's interesting, and you know, it's a great debate here whether we're going to see some other haven assets benefit from it. Obviously, through the last year or so, we haven't seen traditional safe havens benefit that greatly from the decline in bitcoins, while some of them have held stable. I've got a bit of an argument here that perhaps over the near term, gold might have some appeal here, especially if my projections on the U.S. dollar come through, where we're going to start seeing some weakening, and especially on the back of a more dovish Fed. I think there might be some appeal for a tangible asset that's backed by governments and backed by central bankers like gold, you know, versus a currency like crypto that's not backed by anybody.